Okay, we'll go ahead and get started now. So thank you everyone for joining us in yet another of our Expert User webinar series. Today's topic is keeping the old and the new. The timing is almost perfect with this because there's other initiatives going on, and for those of you who were lucky enough to see at SuiteWorld last week, you already know about this information, but for those of you who weren't able to join us, let me give you a little bit of information about what's going on in the world of OpenAir. On April 17th or 18th, the administrators in your account received an email from NetSuite announcing a new user interface. This new user interface, everyone is being scheduled to convert to this new user interface. It's being done in waves. Your specific schedule was noted in that email. So those of you on the call who are administrators, you may want to go back and check those dates. If you're not sure what your dates are, you can certainly contact your account manager at NetSuite OpenAir, or support I believe also has that schedule. If you haven't seen the new user interface, we definitely can schedule some time and demonstrate that for everyone. That wasn't the intent of this webinar. It was just timing, as I said. But that certainly was one of the big topics at SuiteWorld, was the new user interface being discussed even up to the CEO and the CTO level of Zach Nelson. So the new user interface definitely has more of a tablet feel. And we are proactively calling all the customers and prospects that we at least are familiar with or have contacts with, just to make sure that you guys are aware of the user interface coming, and take the opportunity at this point, since change is coming in your environment, to consider other things that have been on the back burner that you've been wanting to put in place, maybe standard reports, maybe a better resource scheduling process. It's a great time to sort of clean house, so to speak. If you would like a little bit more information about that, we did recently revamp our website, and one of the first things that you see when you come into our website is about the new user interface. Okay. Two other things that I thought I would take the opportunity to announce for those of you on the call today before we get started is, again, going with the old new theme, those of you who know about our weekly tips that we send out and the ebook that we did last year, well, based on popular demand, we have actually come out with version 2 with the creative title of Even More, 50 More Must-Have OpenAir Tips, so volume 2. Same low price, $3.99, so feel free to come to our website, look on the tips page, and access that so you have the complete set. Both the first book and the second book, they do not duplicate each other. They are another set of unique tips for you. And last but not least, because everyone loves reporting in the system, we have a reporting training session that we provide to customers, and we've decided to take this on the road so people can take advantage of it from a public classroom environment. So the reporting workshop is hitting the road. We had the first one in DC back in May. And we are doing Boston, Atlanta, Washington, D.C. again, and Chicago just in the next 8 to 12 weeks. More dates and schedule of locations are coming in, so if there's a place near you that you would like us to come and have the reporting roadshow, we certainly would entertain that. Email us at info@topstepconsulting.com. But let's get to what it is that you really dialed in for, and that was the presentation. So keeping the old and the new. So when I think of tracking old and new information, I think of three major categories of change. There's common changes, things like user cost, bill rates, your price list, year-over-year changes that are just going to happen by the nature of business. Then there's also business processes, and business processes tend to be, in my view, what happens from the market trendings, the industry trends. What's the latest way to measure utilization so that you have better insight and strategic vision for your company. Maybe you're delivering new types of products or trying new methodologies like Agile versus Waterfall. And those KPIs and metrics, those are always a never-ending stream of what's the best things for me to track and what's the way to measure my business and keep it on track for growth. And then the third area really is a result of almost like a rebranding or a merger and acquisition situation. You know, you end up buying another company or you develop a whole other product line, and that ends up restructuring the organization or restructuring accounting or changing the way that you're tracking or reporting to information, rolling information up. So you know, these three categories have various reasons as to why they happen, but in some cases everyone hits these at some point in their life along the way. So in the case of the common changes, what's the reason for these changes? You know, the user cost, well, it's cost of living. People getting a promotion, they're getting salary impacts, so the cost of the user per hour is going up. Maybe there's additional facility costs or overhead, and so the loaded cost factor is increasing. Priceless erase cards, as we all know, you know, with the economy, people try to keep their price list standard, but at some point in time they do have to change to accommodate the cost of business. Or maybe industry trending is showing that you can get more value out of, you know, the services dollar for people, so you can increase those price rates. And then last is the target bill rates. So of course if you have rates, standard rates that you publish, how close are you able to get those rates? What is your real target? You know, sales is out there, they're having to do discounting to sort of get in the deals closed. So how close can you get to a target bill rate, which would drive your capacity and your revenue ability for planning. In the business process area, you know, utilization definitions, why would you ever change those, or why would they change? You know, it really comes down to a lot of times utilization is a key factor in your doing your fiscal budget year planning. So I need to have a revenue target of, you know, $2 million. So I have these 10 resources. How do I have to make them, you know, reach a billable level? How can I make sure that I'm, you know, not overtaxing them and saying 39.5 hours a week have to be billable, and you get a half an hour to do your timesheet? You know, so what is realistic for the company, and the hiring methodology and the utilization definitions may be defined based on that, and also compensation targets. The project methodology I mentioned, you know, sometimes there's just, you know, in the world of PMBOK, PMI, Waterfall, 5D, what you name it, there's tons of methodologies out there. Maybe your development organization is deciding to try a different tact, a different method based on what it is their development tools are. So that introduces a whole series of, well, how effective are we delivering information if we change methodology? Then of course KPIs and metrics. This is sort of a big black hole, I realize. Just to let you know, I'm not going to, spoiler alert, I'm not going to list tons and tons of KPIs and metrics in this report, but you know, the fact that there are industry trends out there, there are standard KPIs, metrics that people want to make sure that they're measuring. If you do any kind of professional services business surveys, these are the kind of metrics that are gathered up to identify the industry trends in all of those benchmark studies. And so, of course, people would want to be able to measure those within your own organization. And the last category, the rebranding and restructuring, the lines of business, you know, changing lines of business. You know, maybe suddenly now you offer, you know, in our case we're a professional services automation consulting firm. Maybe one day down the road I offer, I don't know, HR consulting, recruiting. Well, that would probably be because of a merger acquisition or some kind of you know, company merge. That introduces another line of business that would be a whole other set of tracking and organization structures that would have to be in place. And we see this quite a lot working with many of you in the community. When your company goes through a merger and acquisition, people are being brought on board to become part of your OpenAir system. How best can you accommodate that? They don't always nicely slide into your existing organization. You have to change things up a bit. Of course, accounting. There are cases year over year where accounting has to change the way revenue is tracking. Maybe it's more detailed one year. What kind of consulting are we doing? Project management, services consulting, product methodology consulting, or we just roll it up and say it's services, and we focus more on detailing out product, for example. So those changes happen. Those actually are fairly simple to do in OpenAir, but it is a change that you have to accommodate. And of course, the almighty organization structure. Maybe it's just because you think there's going to be an efficiency if you combine, your support desk with your services team, or your pre-sales team with your support desk, or something you need to consolidate or expand and break things out into different departments. So what I'm going to do is, in each of those sort of trifecta areas, we're going to go through and talk about how can you accommodate those changes in OpenAir and still be able to run something for a previous fiscal year, for example, and understand the data in those terms versus the new way of life in today's world. Okay. So let's first take user cost. This is a pretty common one. A lot of you are aware of what has to happen here. But basically it involves the user record and the cost table. So there is a cost table. It's a loaded cost table, and as you know, there's a current hourly cost value there. There's a definition behind this of what 50 means to you in the organization, but that's not necessarily listed here. That's something that you're aware of when you populate the field. But of course it has the historical records on here, and the historical records allow you to say, this year it was 50, but last year it was 49, and the year before that it was 37, or something like that, based on the need for the change. And those updates, if you're not aware, of course can always be done manually, but they also can be uploaded through a tool called the Integration Manager. And some of you know it as OA Connect. It's the same tool. Basically it's a database load tool. If you do have a lot of people to update on a regular basis, the Integration Manager tool is probably the most effective and efficient, and certainly a quick one-button push file ingest process can be developed for you to be able to do that hourly cost changes. So the price lists and rate cards, this is always an interesting one when I talk to folks, because almost every company has a standard price list. And if you're working with the government, you have a GSA price list, and you have certain key customer accounts, and they have a unique price list. And there are needs or occasions where the price list will change. Maybe it's year-over-year changes, maybe it's policy changes, maybe it's contract negotiations. So what's generally helpful is you have to pay attention to the name of the rate card. The rate card can indicate when a rate card is quote-unquote current or applicable nowadays. And the example on the screen here shows 2012 and 2013 as naming conventions, for example. Okay. But changing the rate, there's ways that you have to think about using rate cards when you're setting up your templates and you're copying those projects and setting up rules in the future. What's the best way, if you had to do a change year over year of your rates, what's the best way to keep those projects in sync and updated? So I thought I would give you guys a little example to chew on. Here's a contract, for example. The client shall pay the cost of living increase of 3% in rates across fiscal years. So in 2012 they had rate $150 per hour, and in 2013 that automatically goes up 3%, and it goes $154.50. Okay, so now you have an automatic increase that has to happen in the system. Okay. So to handle your initial startup of the situation, you've basically set up a 2013 year rate card. And then of course all the projects are set up pointing to that rate card. And in 2014 the rates are going to increase. So naturally you may go, okay, well of course the obvious thing is create a 2014 rate card. Okay? But what does that mean you have to do now? You have to go back and manually update all of the active projects, or use Integration Manager to swap out the rate card from the 2013 rate card to the 2014 rate card. Okay? That's probably a lot of work unless you're only dealing with 10 active projects. Okay? Better yet, think about this approach. Rename your 2013 rate card to 2014. Copy that 2014 rate card as like a duplicate rate card from this rate card, and call that copy 2013. What happens is the fact that you've actually just renamed and then of course update the rates in the 2014 rate card, that's the rate card all the projects are already pointing to. So you've already saved yourself a ton of work because just by updating that rate card, renaming it, and saving a historical copy of the 2013 rates, you have updated all your projects and all of your templates. Can you go back and do forecasting and still refer back to 2013 rates? Certainly. Would it be better if you updated all of the projects to have a 2013 billing rule and a 2014 rule? That is also a possibility. It does require coordination, requires additional effort, and of course Integration Manager. But this approach is more of a quick and dirty, and it does get the job done. Timing is key. So that's just a suggestion there. And by keeping the 2013 rate card, you still have that historical reference as you're looking at data and doing data analysis in the system. So let's talk about target bill rates. So for those of you who have been to our webinars before, there is something that we definitely recommend when we talk about target bill rates is using the multi-cost level feature on the user record. The multi-cost level, you are able to track more than one cost on the user, up to 3. In the example here, I basically am showing you one. Because it's a cost record, it does have the ability, you can change that terminology. So in this case, I'm using a secondary cost rate is what the default name is, and I've renamed it to target bill rate. And then throughout the system, anywhere that OpenAir automatically calculates a quote-unquote cost based on these values, it actually will be a quote-unquote bill rate, and it will be your target bill rate, your default bill rate almost, if you want to look at it that way. And by keeping track of that target bill rate, you're able to keep track of the target trend that you want to do year over year for individuals. The benefit of using this, the target bill rate for this, you can get your capacity and demand calculation. You can do an opportunity lost evaluation. Here's what we should have been billing out versus here's what we ended up billing out, so it's opportunity won or lost. Type thing, a difference, a variance with that. So it opens up a whole another series of KPIs and metrics if you take advantage of this target bill rate activity. It does have a benefit over the default hourly rate that's on the user demographic record. So if you have seen that there's an hourly rate field, it's next to a currency field, and the week start date drop down. And many people will fill values in there for a default bill rate. The only problem with that is it doesn't have any kind of date index. So today it's 150 and tomorrow it's 154, and the only way you can tell when that changes is if you run a detailed audit trail report. By using this target bill rate feature on the cost table, you actually can keep track of when those bill rates, those default bill rates or target bill rates will change along the way for reporting. So let's get into the business process area. So utilization definitions. This is always a great conversation. Utilization can be defined. It's really magic, I think. What's changed? Like when you say you're going to change your utilization calculation, well, what actually has changed? What is different? Maybe the available days or the denominator of utilization is changing. We're not going to work off a 40-hour work week anymore. We're going to compensate for vacation that's been taken and holiday time and the time that people have to, they'll be in training, and they're given an allowance for community day, and just various things where there's already plans for that person to not be available. And when you take those type of hours out of the denominator, it ends up meaning that people have to hit a 99% utilization target, and everyone's, oh my God, 99%, but they don't realize that it's 99% of a 16-hour week or something like that. And it ends up being quite achievable, but there's definitely an equation change behind the scenes. What about things like targets by skill set? So we expect the DBAs to have a very high utilization rate, but we expect project managers to have a medium to low billable utilization rate because they may be coordinating activities with internally with pre-sales. They're more of a mid-manager level type of activity. And other things like, do you just measure billable utilization? What about administration efforts? How much travel time? What's your pre-sales percentages? Think of out-of-the-box ways instead of it's just black and white, billable, non-billable. Where are people spending your time and looking at it from a percentage view? when you're dealing with targets, the best way I find to deal with targets is actually to use a feature called target utilization, convenient enough. It's actually a feature, it's under the optional features area of the system. You can turn this on and it adds a link to the user record. The nice thing about this is it is also date indexed, so it allows you to keep the old and the new, how you've changed your targets over time. Maybe it's based on your promotion, maybe it's based on fiscal year needs. But by putting dates in here in the target utilization, you have the ability to control what a person's target hours or days are in the system, and standard reporting values become available called base target hours and target hours for reporting and calculation use. When it comes to utilization, there are standard utilization reports supported by OpenAir. Under the Advanced tab, you guys may have seen them. It's called Resources Historical Utilization. There's also forecast ones for assigned and booked utilization. But we're finding with the features that are being provided and built out in the custom calculations area, this area of the system is the utilization equations are really almost number one in the calculations that are sort of customized for your environment and done by custom calculations. So especially when it comes to defining what your available days are in the system, what are you being measured against for that percentage. The standards that are available in OpenAir are your work schedule or base work schedule. That's the 40 hours or 40 hours minus any holidays. Like next week in the U.S., it's Memorial Day, so it's a 32-hour week versus a 40-hour week. Or target hours, meaning it takes your target utilization, multiplies it by those scheduled hours, and gives you a target base of hours to deal with. But if you had something else unique, like a static value that you would remove for allowed training and a static value that you would allow for known administration time, those would all be things you would handle in the custom calculation. So maybe you want to adjust for everyone on individuals based on their category of resource. They're an executive manager, they're a project manager, they're an entry-level person. They get so many days worth of vacation. Maybe you want to take that out of the equation of the available days. So you would have to define a custom field or a drop down on the user record to understand that category of person so that you could use a detail constant in the custom detail constants area to subtract that vacation amount out and make an adjustment uniquely for those people. Same thing if there's allowances for training and administration. You could create these constants to subtract those values out of the available days and come up with your own unique utilization equation. And then with the filtering features that are also available on custom calculations, task type being a big one when it comes to utilization. Here's an example for my system where I've marked up and keep track of time against tasks based on task types of things like marketing and mentoring and training and travel. I want to understand where the team is spending their time in the company. And I'm using the filter sets, or the filters that are available as I define these equations to uniquely identify a percentage calculation. And you can see I'm using base target hours because I'm using that target utilization value for my calculation. So all the time divided by base, filtered by some type of unique category such as travel. And by creating all of these equations, now I can add them as columns on a report and I can throw them onto a dashboard. And now I've got a dashboard that shows me at a high level where in my company resources are spending their time. Okay? So again, when it comes to tracking old versus new, say this year you actually do want to track all of these categories. Okay, great. Well, that does mean that there is some preparation that has to happen. You have to implement sort of a task type. And you can create these calculations and give them date ranges. Give them a naming convention that says this is the 2012 calculation, this is the 2013 calculation, so that when people are running reports, they're pulling the right one on, or you're at least setting standard reports up to be able to do this. And of course, if you are using the same calculations year after year, but people's targets change, then by using the date index on the target utilization, you can adjust for those along the way. Now, what about project methodology? this is the area I think is underutilized in the system because it is something where, as a project manager, you want to be able to analyze how much effort are we spending in, if it's a phased methodology or a cycle or a sprint or whatever your methodology is referring to it. I think there's a lot of opportunity lost out there in OpenAir's ability to say, okay, so I estimated it to be this. I estimated it to be 40 hours of planning, and we're coming in at 20, but now we find out that on the back end, the 16 hours of support have turned into 75 because maybe we didn't catch things early enough because we didn't spend as much time as we should have. So those kind of methodology reviews or metric checks or follow-ups. So when we talk about methodology changes and we want to track information according to a methodology analysis, it's typically task-based because there's a setup and a workflow that has to happen and people record time against it. And those are the same things where you estimate how long it should take. That's part of your SOW or your proposal process. And really when you come down to, well, how long are we spending in each of these phases, it tends to be a phase level, not a task level saying, oh, the kickoff went 2 hours versus 1 hour. That's a little too low level. But if you're dealing with things like the design phase, the development phase, being able to understand estimate versus actual so you can refine those estimates or refocus why are we not spending as much time as we think we should in certain areas. Okay. The big mistake that I see when we get involved in customer accounts is, quite honestly, people try to track that information at some level, but they rely completely on the name of the phase or the name of the task. And that's a free text field. It's hard to lock that down unless you basically dictate a template always. And project managers are held to a strict project schedule where they don't have any ability to sort of modify it, augment it, or remove things that are not applicable. So here's an example of a 5D methodology I made up. Discovery, design, development, due diligence. I couldn't think of another D for testing, and deployment. Okay. So I want to understand how much time we spend in each of these phases versus how much time I estimated according to the statement of work where we spent this time. Okay. So what you could do, and what I do actually see a lot, is you could actually run a detailed time entry report. You could pull all of that raw data out of the system, time entry detail-wise, because it does have the task and the phase as reportable values on the detailed time entry. You could download that into Excel. Then go and run a download of the outline view or the task view of the project that has the planned hours on it, and then combine those two together, do some pivot tables and VLOOKUPs, and now you can have your estimate versus plan roll up, understanding where you're at from an analysis. Okay. Some of you may be laughing as you're hearing this going, oh my God, I can't believe that. I've seen it more often than I'd like to admit, where people will do this type of data analysis using Excel and just pull raw data out of the database. So this is very time consuming, cumbersome, and tends to be why a lot of people will not spend the time to go back and verify estimate versus actual. What about using something called a service line feature? Okay, there's a feature that was released a couple of years ago. For those of you who are using the system to track revenue, for example, or passing things over to accounting or billing, there's a field called service. For some of you it's called category, so for some of you it's called activity. For some of you you've renamed it to SKU or part number or something, but it's really meant to sort of stamp something onto financial transactions, time transactions, with a value of what does this relate to from a service delivery perspective or an accounting perspective. So they expanded that feature because it's such a powerful field. They expanded it so there's actually 5 more of these things you can use. They're called service line 1 through 5. It's a feature that you can activate internal switch on the project, in the project module. And when you activate these service lines can be added or can be displayed at the task level. Okay? So think about, what if we used one of those and we renamed it the methodology phase? Okay? And we said we are actually going to track how long we spend in each of these phases. So as I set up a task, I have to identify this task is part of this phase. Of course, I'm putting the phase as the part of phase drop down on the project task. But I'm also setting this field. It seems a bit redundant, but what that does is this methodology phase value now is stamped on all time entries. It's stamped on the task during the planned hours. And now you have the ability to pull those actuals versus estimates, saying, okay, in general, and thinking even, thinking project by project, how long are we spending design versus estimate versus actual? How long are we spending on projects of this size? How long are we spending on projects in this line of business? Just going through and finding out where there are trends that you could make some investment and improve on your services project methodology. And the last one, the KPIs and metrics. What are these is the first question you ask yourself. Like, how can I track old versus new? What's the new KPI versus an old KPI? And then how do they apply to my business? A lot of times I see KPIs and metrics being considered because they're a new trend, a new days outstanding, days service outstanding, sales outstanding. I mean, utilization has always been a common one. What about bill rate trending? What about accuracy of resource scheduling and forecasting? How can I measure those when I decide that I want to start tracking those and giving those names that mean something between the old and the new? Okay. So most KPIs and metrics are best handled by custom calculations because the OpenAir system comes, as you look on the advanced report tab, it basically comes with things like a utilization report or a loaded FTE type report. But it doesn't handle some of the more complex, like trending margin, for example. You may want to create your own report that understands what trending margin means. What does margin mean to you? So here's the checklist I kind of came up with as you're considering KPIs and metrics and what that means to the system, what that means to the end users, what that means as far as training, data preparation, and cutover. So first, define what the equation is. Don't try to do it in OpenAir. Just what is the metric, what does it mean to you, and what do you need to actually calculate the metric? Then identify, does that metric only apply to certain types of information? Or do I need to understand and include or exclude things according to some type of indicator? This only applies to employees, not subcontractors. This only applies to product fixed fee projects instead of T&M services deals, things like that. Identify where the data is coming from. Is it something that OpenAir is automatically computing? Maybe it's something that comes from timesheets automatically. Or is it something that somebody is typing physically into the system? Project close date. Okay, there isn't a standard field. There's a finish date that's available for calculations. There's the last time entry date, last booking date, last dates in the system. But there's no project close date. That would be a custom field that you would add. So who's typing that in? How reliable is that information? Okay. Identify the gaps of your current OpenAir system according to answering questions 2 and 3. Okay. You may need to set up some new custom fields. And I'll talk about pick lists in just a little bit. They're actually a very useful field to consider. Once you've decided what you need to change in the system, well, now you actually have to analyze the data to understand if the current data that you have is clean to be able to start reporting on now. Do you have to update some of those? That close date example is a great one. Unless you've made it mandatory or if you've had some kind of process around it, it may be empty many times. And now if you're relying on that to have an actual value in it if the project's closed, you really need to make sure that that's configured correctly and populated. Train your end users. Train, train, train. Okay? Because something shows up on the form, sometimes people feel like they have to fill it in even if they don't understand what it's meant to do. Train them and let them know exactly what it is that field is, where are the dependencies, why is this field necessary, and then put everything in the system. Okay? Once you've got your data there, now you can do your custom calculations because now you can verify that the custom calculations will actually produce what you need. All right? So now we're getting into the bigger changes, the bigger old versus new. What if I introduce brand new lines of business? Or you know what, I get rid of my old lines of business and I introduce new lines of business. This happened to me when I worked at older companies where they went through sort of a rebranding exercise. They wanted to rename product suites. and combine them in different ways on how they functioned and provided service to the industry. So for example, in TopStep we have a series of offerings. These offerings have changed over time as we develop efficiencies. Maybe some features are more useful from the OpenAir community versus some of our earlier offerings, which are sort of irrelevant at this time. So how do I track those? You could set up a custom drop-down field, and this is a pretty common approach. And then you make sure all the projects and stuff have the value in it, either manually or through Integration Manager. So I put that custom field on there, I set the values, and I'm good to go. Okay? Except next year I decide I'm completely redoing this. I'm getting rid of all the integrations, and we're going to do a different tool, for example. So what happens? Okay? So next year I decide I'm going to change some of my offerings. I'm going to get rid of some, I'm going to add some. So I add to that drop-down. If I just add to the drop-down, now I'm really making a long list of stuff, and some things are not valid anymore. So that starts creating confusion because you can't stop people from putting a value on if it's in the drop-down list. And worse, if you say, okay, well that's not valid anymore, so I'm going to remove it. What that does in a custom drop-down field is calls what I refer to as a ghost value. You can actually see the value in the field if you look at a list view, but if you try to run a report and report on that value, it's blank because you removed it from the custom drop-down, and so it doesn't even know what that is anymore. Okay? And that really messes you up from being able to run historical reports, because now what was valid in 2011 is not even reportable anymore. It's a blank field in the system. So you get a little upset that, oh geez, it's not working the way I wanted, and now I've lost access to data in the past. So I'm going to go back to that service line thought. There's those service lines 1 through 4. Those are fields that basically you populate with records. You say, maybe it's the business efficiency offering, the deployment services offering, integration Salesforce, integration NetSuite. And those are all individual records you create, and they have an active button, inactive button, active, inactive, just like regular transactions, just like the service list. Okay? So what if I used one of those service lines? Okay? And I create something, maybe I'll use service line 2, and I'm going to use that as my offerings or my line of business. Okay? But you may be saying, wait, you just told me about that feature, but you said it was at the task level. How does that apply to line of business? I don't want to have to set this on every single task. The nice thing about the service lines is it really does just give you another table where you can put values in and you can control inactive and active flags. The custom pick list option, and if you don't see pick list when you create custom fields as a type of field you can create, email OpenAir support. It is an internal switch to activate that. Many of you probably have that already because it's part of the provision now, I believe. But if you create a custom pick list field, you have the ability to pick the source or the table that that pick list field is pointing to. So you don't have to populate a list of values. It's looking at a table to get its list of values. Okay? The benefit of this is now I can point to this, like let's say service line 2, and we're going to rename that through the terminology change to lines of business. Now I have the ability to basically activate and inactivate records in that service line 2 table. The values are always there, just like they are when you have a user that's active or inactive. You could still run reports on all that data. You could still pull information on that data, subtotal by that data. But the drop-down only shows on the field, like the project forms, for example. So in this example, I'm saying I'm going to create this pick list. I'm going to put this pick list on the project form, and it's going to point to service line 2 to understand what the value list is. Anything that's labeled as active is going to show up in that drop-down. So it looks exactly like my drop-down, except it's got a lot more power, because next year if I decide these 3 offerings or these 3 lines of business go away and these 2 new ones come in, I add 2 new records and I inactivate the ones that are no longer valid. All of that historical data is still in the system. Okay? So no more ghost values, no more clutter, very clever. So quite often we find working with customers, these service lines 1 through 5 come in handy many, many, many places because of that powerful way to use those as sort of controlled transactional tables that we can easily keep dynamic drop-down lists updated. Okay. What about accounting income account category? So This year, instead of tracking services revenue, we're tracking it by project management, we're tracking it by services on-site, we're tracking it by services off-site, some kind of 3 categories like that. Okay. In our example, we are using consulting, release management, and administration. So this is one of the simpler changes historically to handle in OpenAir. If you have a new revenue category, create it, and it's active, and it becomes available for all your financial transaction stamps in your task tracking. If you have a revenue category or a service that no longer is valid, you inactivate it. Historical information is still available, but it's no longer available to set on new things going forward. So probably one of the most basic and most common old versus new tracking mechanisms in OpenAir. And the last is organization structure. So this really can be handled in two different ways depending on what is actually changing in the organization structure. So let's talk about one term called hierarchies. Okay? You can have hierarchies for users, projects, or clients, and they're usually done by either geography or maybe subsidiary or maybe a line of business. And it allows you to group information according to a reporting structure, basically. And it is powerful, however, it's limited. These hierarchies, you basically use them on reports to sort of lay on top. It's a report layout. Lay on top of the data so it aligns to the structure of the hierarchy. In order to do that, though, you are limited to the reports that you can use. So if you have a user hierarchy, you can only use that user hierarchy on the user summary report. If you have a project hierarchy, you can only use that on the project hierarchy report. Okay? So there are limitations on being able to use the hierarchies, but if they work for you, and for some people they do work very nicely, what happens if suddenly you no longer want to track it by geography, you want to track it by subsidiary name, because now you're splitting things up by subsidiary, for example. Okay. So there's really special considerations when it comes to hierarchies. The hierarchy feature is very easy to basically move things around. So for example, deployment that's under California right here, I could just move that to say, nope, its new parent is Texas. So I could really just move that automatically. And all historical data moves as well. So there's the challenge that you have to think about. So if you really want to continue to pull reports based on how was the organization structured in 2012 versus how was it changed into 2013, think about creating a second hierarchy, creating a changed hierarchy so that you would apply a different report layout to the data in the year 2013. And so you would have multiple hierarchies as you go forward. Not very scalable, but hopefully the change that you're making hierarchy-wise is not as comprehensive as completely redoing the organization structure. But there are some things to think about because the hierarchies really have no date index, no date value associated with it. So if you're using hierarchies for reporting layout, keep that in mind because there isn't really a nice way to deal with it from a date index other than creating multiples of hierarchies and making sure the naming convention is clear on which one would apply based on the time frame of the report you're running. But there is another way to deal with organization structures, and that really is pointed at the user level. So some of you know about this concept called user entity tags. So if your organization change is really being driven by the way that people are reporting differently and not necessarily project ownership, you can consider doing it using these user entity tags. The benefit here is you can define anything. You can define cost centers and departments and whether they were an employee versus a subcontractor. It could be a number of things. It could be the important organization structure. It could be the custom fields that you would have considered putting on the user record. The reason this can be anything is because you define what the tag group is and what the valid values are on it. The benefit in the old versus new view is you set what the current value is and you have date indexes to be able to control what old values were. So when you run reports, the person would be included in, for example, our example here is they would be included in the services department whenever there's reports involving the services department until the end of this year. And starting next year, they would be in the management department. Okay? So it does give you that date index and to control the data along the way. So as we've gone through all of this information, probably the biggest thing you're going to take away is plan, 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 and then plan again. Making changes to the system, especially when it comes to things like custom drop-downs, think about the impact of what if I wanted to pull the report for last year's types of tracking? What if I want to do the trending from year over year or something like that? You really need to think about how you want that data structured in the system so it can handle the old versus the new going forward. So I would even venture to say, plan ahead. You know what, I'm thinking next year we're probably going to have an organization change because we seem to have one every year. So why don't I go ahead and start setting the system up, converting those drop-downs, setting up the user entity tags, basically doing a structural conversion of your current OpenAir configuration. Reports may change slightly, but they'll be more robust for it. And then next year when the change happens, now you just have a change management. Instead of reconfiguring everything, you just add date index values into user entity tags and activating, inactivating service lines. It's much cleaner, much easier to maintain and administer in the system. Okay. The only exception is the custom calculations. If you're creating those sort of year over year, either the 2013 version of utilization and the 2014 utilization, that's really more of a communication out to the users to say, hey, if you're running your reports, make sure you're using the new utilization value, not the old one, or maybe you can use that trick to rename the old one to the new one and redo the calculation so they automatically get the new calculation. But when it comes to reports and having them pull in the right value as things change over time, I really recommend, and we've done a previous presentation on this, a standard set of reports that people all have to base their reports off of or run directly instead of creating their own, so that you have that common sense and point people to and communicate out, hey, the global reports have been set up, so go ahead and use those as your baseline going forward. And once again, I'm going to thank you for joining our webinar series. We do definitely like your support, appreciate your support, and hope you gain benefit from these sessions. If there's a topic that you would like us to talk about, please don't hesitate to email us, info@topstepconsulting.com, or give us a call. And definitely make sure you're on that OpenAir Users LinkedIn group. We're going to be pushing stuff out there, especially announcing things like the reporting workshop dates and access to the second version of the tips ebook for everyone's reading enjoyment. So thank you once again, and we'll talk again next month. Take care.
Bye.